Hello and welcome to another weekly market commentary proudly brought to you by Trade with Precision and icecommentary.com for the foreshortened week commencing on the 4th of July, Independence Day. Before we begin the commentary, I'd just like to wish all you and your family a happy holidays, and I hope you have a very good time off and get some good relaxation. The markets will be joining you on that week off, so it'll be business as usual as of Tuesday. We've had a very interesting week on the currency and the stock markets this week. Okay, it's been a very, very interesting time. Now, looking at this daily of the dollar index, you almost get the feeling that something's going to happen. Something's going to give right here. Now, the reason why I say that is this. Looking at this daily chart, you can see how we've had this real intense compression of price over time, where the bulls and the bears have been sparring each other, and sometimes the bulls are winning, sometimes the bears are winning, and you can just almost see that this little resolution of this conflict coming to a head right now. How do I trade this? Well, it's quite an interesting time, to be honest with you. I don't quite like to get involved in the fracas, if I could call it that, because it just decreases the probabilities of my trading outcome. So having a look at that, how would I play this type of setup? Well, let's have a look at the highest time frames to start giving us an indication of what I can expect. Now, this weekly chart, this really does show the sparring that I was referring to quite nicely, in that you can see that from this low we've had one, two. That's it. 2 bullish closes of the weekly candlesticks. Now, the reason why I say weekly bullishness is because the price was able to bring itself right up to these levels and then close above its neighboring candlestick, and that's quite a bullish sign to me. And then sparring back, the bears have got a couple of bearish candlesticks. We've got 1, 2 as well. So there's that we're equaling each other out. That sparring match is pretty much negated. However, I would say that the bears have definitely pulled one over the bulls this week with a nice solid down week. We were above the highs. We're looking like we're breaking up and continuing on, but lo and behold, the pressure resumed to the downside, and we started to slide all the way down. So I would definitely say, from reading into this weekly candlestick chart, that a continuation is most likely to the downside. Okay, definitely from reading those candlesticks. And I think the monthly really supports that, in that when we first broke down to new lows, I was a bit worried because we were overextended from our moving averages. We were right down here. Now, the last 2 months, we've actually waited quite patiently for these moving averages to catch up. And that's really healthy. We really need price to wait for the moving averages for a healthy trend to resume. Now, namely this, over here you can see we put in a new low. We slide back up into moving averages before the new move. Pull back into moving averages before the new move. And that is a sign of a healthy trend. When we start getting that, that's an unhealthy trend. That's a type of trend where if you short, fantastic. That's like the icing on the cake. But you never know. The pullbacks into moving averages are going to be met with a lot of volatility, and then you start to get this type of thing occur. Okay, so that's what unhealthy trends really do. Now, this move here, we've had a very unhealthy move back down because it was quite overheated. However, right now, you can see we've been very patient waiting for price to catch up. So this monthly chart, if we can get down beneath the low of this candlestick right through there, I would definitely say that this now have some legs to the downside. We've got we've got convergence to the downside with these indicators, so everything's looking quite nicely. Before I give you my what I'm looking for this week, let's have a look at some of the currency pair or currencies that stand out against the US dollar. And I'd have to say that one of them would be the Swiss franc. The reason why I say that is just looking at its charts. It's absolutely phenomenal how this market has continued down, and that's just been overall Swissy strength. We've had a fantastic move all the way down through these levels here. Look at this big run on this monthly chart. Overextended, yes. I would like to see some kind of either a consolidation, waiting for the moving averages to catch up, like we've done on the dollar index before our next move down, or a nice little pullback before the next move down. That's what I want to see here, folks. Right now, we are a little bit overextended, but if the dollar really does crack down to the downside, like those monthly and the weekly charts look like is on the cards, this will continue down. Okay, this definitely will continue down. Another one I think is notable is the dollar versus the CAD, the Canadian dollar. Looking at this weekly chart, things were looking quite well for a short period, a few months. We started to really show some signs of rallying up, but now this week we have cracked and we've closed. Now, that is definitely a bearish sign. There is definitely a lot that you can read into this. I definitely see this going or continuing to the downside, and a good overall long-term view of this would be this monthly chart. Having a quick look at last month's rejection candlestick of parity in the moving averages. We've broken down through the low already the first day on Friday. Now I must admit that's looking pretty good to the downside for dollar CAD. Another one that I think is worth noting today is the Kiwi. The reason why I note it is because looking at this chart, in a little while we'll be looking at the index markets, and you'll see that this chart you wouldn't be wrong to say, well, this could be the Nasdaq. Okay, this monthly chart could quite easily look like the Nasdaq chart. Take off these prices down the side, and you would actually really think that this is. It's just showing these a nice positive uptrend, these nice bottoming tails. Moving averages are looking really, really good. I definitely think that that this monthly chart has some legs to the upside. Another thing that's worth noting is this weekly chart. How we just keep on grinding out results. We just keep on pushing higher amid divergence, you name it. We just keep on putting in new highs and new lows, and we just, it's not pretty, but it's continuing up, and that's just that overall Kiwi strength just pushing through and really starting to make some nice upside movements, gains for the upside. So coming back to the dollar index, what do I see? Well, like I was telling you earlier about this coil pattern that we were seeing, or this compression of price, however you want to call it. I think it's quite an interesting time, to be honest with you, and I don't really trade these patterns, but it does give me a good indication of pressure forming, almost like a volcano where you get that magma really forces itself out through the Earth's crust. Well, this type of pattern really does have that type of play. Now, if we break out to the downside, I mean, we could have something like this. Okay, we can have a nice big move out. So what am I looking to do? I'm not looking to try and short out of this compression now. I just don't think that that's a very high odds type trade. What I'd like to do is when it starts to move, then I'll start to look to try and short pullbacks into the moving averages. Okay, just get on board, take these nice little pullbacks. You can make 2 or 3% on each one of these pullbacks, and that is a nice return from your trading. So I'm not looking to try and trade inside here, but I do see a potential for continuation to the downside. One last view of the weekly charts. This last week's candlestick was very, very bearish. So I definitely think that also shows some downside potential. The monthly shows downside potential. So all three time zones, or time frames rather, are looking good to the downside. All right, folks, just to remember, Monday is a holiday, no markets, so keep your computers off, spend time with the family, as most of you will, no doubt. And we'll be back in action on Tuesday. So I hope you all have a very, very good holidays. And from all of us at Trade with Precision and AskCommentary.com, we're wishing you a great time. Bye for now.